If Bitcoiners criticize someone acquiring Bitcoin or a company acquiring Bitcoin, well, it's likely that they don't understand Bitcoin, because the adoption of Bitcoin is by any type of actor by definition, because Bitcoin is decentralized and Bitcoin adoption should be celebrated. The recognition of Bitcoin as pristine collateral in the traditional capital markets has been greatly accelerated by the Bitcoin ETFs and by the rise and success of strategy. And this, on top of course, all of the political progress that you've seen out of the US, in my view, are big wins that are coming from people in the governments, people in the financial institutions that are pushing for Bitcoin adoption and the respect of the core ethos of Bitcoin as this adoption goes on.
Hello, everybody. Tyler Rowe here with Alexandre Laizet. Great to see you again, buddy. Back all rested from BTC Prague. There's been lots happening in the Bitcoin space. We've got controversies everywhere with regard to Bitcoin treasury companies, Bitcoin OGs. STRC is really getting stress tested at the moment. Bitcoin's price is still up from its lows, probably about 10%, but we've got lots to talk about today. How are you doing?
Doing great. We are here for this. It's, you can have bull markets sometime and you prepare for it, but it's in the bear markets that the best products, the best engines, the best companies are built. And it's really a big opportunity if you have that long-term view. This is the time where building yields the more, and we are here for it. And I think among the Bitcoiner community, everybody is very bullish on the future, and the future is bright when you put your orange glasses. And at the same time, when you go back to the reality of where capital markets are, which is 99.9% of non-Bitcoin things, you realize how early we are, and that's the opportunity that we have, is that we can see things that other can't, and that's the opportunity. So feeling really great about this, and looking forward to the future. And at the same time, let's discuss sort of the challenges that we apparently have at the moment. I think it's
Totally.
important.
And yeah, I think thinking about this bear market, price wise, we haven't had that, 80% drawdown that's been characteristic, or 75% of, the 2021-22 cycle, 2017, and the ICO craze after that in 2018. It's interesting because there's like, I'm so bullish because, we're in this bear market and there's nothing structurally wrong. There's not like these black swans that have happened in the past. Certainly something can always blow up. We had leverage get wiped out a little bit with traders probably back in October that sent us downward in price action. But, I guess like the biggest things to talk about in a bear market is Bitcoiners start fighting with each other, and, different camps emerge because we're not dunking on the Peter Schiffs of the world, or the other traditional finance haters. So I guess one of the big things was, and I'd love your take at this, thinking about what happened in Prague. Jack Mallers has been out there. He's famously the CEO of Strike, which is a Bitcoin exchange, a place where people buy and stack sats, and he's going to be leading the company 21, which is kind of a Bitcoin conglomerate, is the idea they've got. They haven't completely tightened up all the merger there, but there were a lot of clips that were spread around online, and I watched some of Jack's podcasts that he had, kind of breaking down his side of things. But he was there, he was in the room asking questions about, he's like, I don't even understand MNAV, and he was I guess he doesn't understand maybe some of the new metrics that have developed in the space, even like around Bitcoin per share, different ways to calculate MNAV, like an enterprise value MNAV. And I almost feel like, he he doesn't like the term Bitcoin treasury company for whatever reason, and so, all a Bitcoin treasury company is a company that has Bitcoin on their balance sheet, that treasuries Bitcoin. That's exactly what it is. There's so many different flavors. We've talked on the show so many times. There's what you guys are doing in Europe. What's happening here in the U.S. What's happening in Japan. There's so many different strategies with the digital credit model, with different types of operating businesses. But what do you think the big disconnect is from Jack? I read it like it feels like he's got some sort of chip on his shoulder, with Saylor, and is there a real beef there? Is there tension, or are we just hyper analyzing things with as we are wont to do, I guess, on Twitter?
Yeah, I think it's a much bigger picture that we are all operating in. I think we are experiencing the great securitization, the great institutionalization, the great financialization of Bitcoin. And one side of the Bitcoin community thinks that to some extent this might be negative in terms of the grassroots Bitcoin adoption. And I think the comments of Parker typically would tend towards this, to reminding everybody that you should look at Bitcoin first and you should understand the risks of financial instruments. And you have the Jack comments that, yes, the financializations implies a sophistication in terms of the analysis of securities, in terms of the analysis of institutional grade products. And yes, there is no standard way of doing analysis today. And on the other side, you have the people that realize that institutionalization, securitization is inevitable. The same way that the internet is unstoppable and the adoption of the internet by institutions, by corporations, by governments is inevitable. And if you want to build peer-to-peer applications, that's more on the developer side that you can really leverage those internet technological tools that in any case provide the optionality to the individual users. And on that side of the Bitcoin community, you have, of course, people like Michael Saylor that look at this inevitability and from a corporate balance sheet perspective, make the rational choice of first a defensive one, which is to acquire Bitcoin. And if Bitcoiners criticize someone acquiring Bitcoin or a company acquiring Bitcoin, well, it's likely that they don't understand Bitcoin, because the adoption of Bitcoin is by any type of actor by definition, because Bitcoin is decentralized and Bitcoin adoption should be celebrated.
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a Cold Card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wish for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
And yes, of course, you will have good and bad actors everywhere. Whatever the adoption of Bitcoin, it's a tool. A tool is a technology that works, and it turns out that Bitcoin is the best technology for savings. And in that way, that is why, from a traditional capital market perspective, Michael Saylor calls Bitcoin digital capital, because it is the best technology, asset, monetary network on which you can capitalize and build corporations, institutions, issue different type of credit instruments. And then you have some misconceptions about all of those words, and it seems like most of the discussion take place on the basis of different type of definitions, because money in the Bitcoin world means Bitcoin, but money in the traditional fiat world, in which 99.9% of the traditional finance industry is, money means for them the US dollar. And so, of course, there will be different terminology used when it comes to the audience that you talk to. And so that's another area where Parker would say that no, you cannot call digital credit-based products that have an ambition to deliver yield with the lowest volatility possible as money. And at the same time, a lot of the traditional finance community would look at instruments that can provide low volatility and yield in US dollar as money-like instruments, but they are not money in the Bitcoin world. And so you have all of these different definitions, sometimes contradictions in terms of the language used, which comes from the objectivity, the rationality of part of the Bitcoin community going into traditional capital markets to bring Bitcoin adoption to the masses, to bring Bitcoin adoption through the traditional financial ecosystem, to which 99% of the population is exposed through shares, through bonds, even through the real estate industry, because those are titles of property. And so then there is that overall criticism of, no, but you shouldn't do that because this is fiat and this is bad. Okay, so I think that there's another thing to say. When you see an inevitable progress, when you see an inevitable wave of adoption, you have two choices. You can criticize AI, or you can adopt it in the best way possible to provide value to the world. And so it is an option to criticize AI, and it is an option to criticize SpaceX and to criticize OpenAI, and you can spend your whole day criticizing big tech and saying that this is fiat. The point is, any company is fiat, because a company is a contractual agreement that is comparable to a decree. It's comparable to creating a contractual arrangement between a different group of people. And if you define fiat in such a broad way that no company should touch Bitcoin because this would be bad for the decentralization, not only this is incorrect, because in fact the Bitcoin companies and the Bitcoin treasury companies and the Bitcoin companies that are listed in the stock market are in fact contributing to the decentralization of Bitcoin. And I will give you one example. 4 years ago, there was like 2 or 3 banks that offered Bitcoin custody. Now it's tens of them. And this is a lot of different options for Bitcoiners to do different things in the financial system to get a loan out of their Bitcoin. The recognition of Bitcoin as pristine collateral in the traditional capital markets has been greatly accelerated by the Bitcoin ETFs and by the rise and success of strategy. And this, on top of course, all of the political progress that you've seen out of the US, in my view, are big wins that are coming from people in the governments, people in the financial institutions that are pushing for Bitcoin adoption and the respect of the core ethos of Bitcoin as this adoption goes on. And so I think a lot of those debates and contradictions just come from some misconceptions and malinterpretations of different people's interests. And I've seen a sentence that I really completely disagree on. Is sometimes I've seen, oh, but you cannot listen to that company because that company is obviously selling their shares. And then you realize that some of the people that can say that also are working at a company that sells a product. And so, yes, you can have a company. Yes, you can work for a certain objective, which in the case of a Bitcoin treasury company is to accumulate more Bitcoin and to increase Bitcoin per share over time. But I think some level of a bet on generosity, a bet on the other people good intents to make sure that we can have a constructive conversation is important. And I'm sure we will get there. At least these debates are very helpful, in my view, to get to the truth because, the truth will always save us. So at least those debates make the light come out of the dark.
Absolutely. I think that's a healthy way of looking at it, Alexander. And we kind of take that for granted as that these debates, happening. Sometimes they're not productive, but they can be really healthy for the community, right? They can be ways we can learn from each other, strengthen our conviction, strengthen, how we think about things. And, the one thing about, Michael Saylor, and I think of a lot of people, executing a Bitcoin treasury company or a Bitcoin equity strategy is that, you show like the humility that you're open to change your mind. You're open to, understanding things in different ways. And I think that's on full display, as well from like Saylor. And yeah, it's just been really interesting to see a lot of the pushback. Yeah, you really, there's a couple threads that you really hit on that made me think when you were talking just now. It's like these conversations go on outside of Bitcoin, right? When there's so many people who are, really, fearful of the AI trade or criticize what's happening with AI companies. And I'm sure there's lots of merit there. There's lots to criticize. There's lots to criticize in big tech. There's lots to criticize about, data centers, the pros and cons of them being added. But the ultimate thing is that, these are technologies, right? In the same way the Bitcoin network is a technology that's, allowing, pristine money, the best money we've ever had to, be transferred digitally in a way that's secure, pretty instantaneous, pretty cheap. And it's just an improvement upon, the hard money of the past and certainly fiat because of its scarcity as well. So yeah, I mean, with energy, nuclear power plants, gas pipelines, there's always pushback on these types of technologies. And I think that's just always going to happen. There's going to be people who disagree. And I view Bitcoin the same way. It's like, it's an open source monetary network. You shouldn't be fearful of maybe a Fidelity, a JP Morgan, a BlackRock getting involved with Bitcoin because, ultimately at the end of the day, they can't change Bitcoin. Bitcoin can only change their organizations and how they view money, how they build on top of it, right? So all these companies are building on Bitcoin. Maybe it's not in the way that's, a Bitcoin pleb or, someone who's, primary thesis is the sovereignty aspect, which you and I both certainly ascribe to. And yeah, it's like I was talking with Tim Kotzman and Soleil yesterday on a stream about this. There's some similarities in the Bitcoin community. Anytime you have such ideologies crashing together, or some people who are aligned on a lot of different things, it kind of mirrors infighting that happens in religion as well. You see, we have, thousands and thousands of different denominations and churches in the world today. And, it's like as soon as someone has a different idea, it's like someone can be the heretic to somebody else. And that's how there's fragmentations within communities. And this infighting, like, we don't love to see it, but we could build stronger through it. And I think that's the healthy way to look at it. Yeah, just maybe I can bring up a couple tweets and really get to the heart of maybe what Parker Lewis, what his big disagreement here might be with, Bitcoin treasury companies. Just looking through, he had a couple tweets. He's really emphasized, Strive's stock price is down 85% year to year, which is, just a snapshot in time. The company's selling stock to buy Bitcoin. It trades at a 90% premium to their Bitcoin NAV. And their CEO says its benchmark is Bitcoin, of course. The benchmark investing your money is what you could own today. And he says, sell stock and buy Bitcoin. And he says, this every Strive shareholder in this case, should be concerned. The hurdle rate is literally the equivalent of holding Bitcoin, but there's lots and lots of incremental risk to investing in the stock, and the stock trades at a 90% premium to its Bitcoin NAV. So yeah, I think that is one of the big disconnects here, specifically with Parker, and I see it a lot of people superficially critical about Bitcoin treasury companies, is that, hey, there's risk in owning a Bitcoin treasury equity. But I mean, yes, investing in any stock carries some degree of risk, but there's also, so many different opportunities that investing in a Bitcoin equity offers, between the way they can access capital markets, the way they can leverage the markets or provide amplification in the market. You or I can't go out and create our own digital credit product, our own preferred stock. We have to do that in the, context of a company. So, yeah, I don't understand, but it's easy to take a snapshot in a bear market and see how maybe a Bitcoin treasury company has underperformed Bitcoin over a shorter period of time. But as Bitcoiners, we know the low tide preference is the thing. Zoom out, look at the long term, and that's the value proposition of Bitcoin treasury companies for me. Is if you're an investor, if you're building one, it's to outperform Bitcoin over the long term, right? It's to use Bitcoin as capital, and I think that Bitcoin as capital word triggers a lot of people, but at the end of the day, capital is just, what's underpinning these balance sheets, Alex.
Yeah, I think there are a couple of different things. I think it would be useful if you can put back the first
Sure.
tweet that you just showed,
Yep.
because there are a couple of different comments I would like to share. The first one, I think, is, well, first of all, I deeply respect Parker. He has written Gradually Then Suddenly a series that have greatly contributed to me joining the Bitcoin network and adopting Bitcoin and dedicating my life to Bitcoin. And I would like to thank Parker for being such a steward of Bitcoin for so long. And so I would like here to separate Parker from the comments and just talk about the ideas and consider that this is not a commentary against Parker itself, but just on the different comments that I think are representative of some part of the market that thinks that way. And so I think this snapshot of taking a specific Bitcoin treasury company and spending so much time on one single company to indicate to the public to sell shares, and taking only a specific period to analyze that performance or outperformance. And that period being one of them, you have 1 year, but you could analyze different types of periods, is slightly incorrect in my view, at least. And I think, importantly, Strive, Strategy, MetaPlanet, and Capital B, for example, have been outperforming Bitcoin since the launch of their respective strategies. And the Bitcoin treasury companies that I mentioned have always been very clear that there are risks to investing in a Bitcoin treasury company, that this is not investing in Bitcoin, that this is investing in an equity, that over a certain period of times you can have underperformance, that under certain periods of time you can have outperformance, but that the Bitcoin treasury company is exactly structured to target the potential outperformance of Bitcoin over time by taking in and issuing, most precisely, credit instruments over the longest term possible, even perpetual, and having an arbitrage between the financing costs and the growth rate of Bitcoin. That is a very simple idea in traditional corporate finance. That is Bitcoin maximalism in Bitcoin capital markets. Now, if you hate Bitcoin capital markets, or if you hate capital markets, then of course you shouldn't look at Bitcoin treasury companies, because they are operating within capital markets where 99.9% of the wealth of the world is concentrated. And yes, you can have specific periods where you can have underperformance. But then if you look at the underperformance, you should look as well at the outperformance on over time periods. And it is not very Bitcoin ethos-like to take a snapshot of a very short-term period and conclude of the soundness of a specific strategy. Because if you would take Bitcoin from November, that's a Peter Schiff-like comment. You would say that, oh, Bitcoin is down, it's dead, it's impossible, you should better buy dollars and don't touch Bitcoin, you know? And that would be incorrect, because then you would say, okay, you looked at the pico top of the market and you compared that to the bottom of the market and you said that Bitcoin is dead. No. Strategy has transformed a company of $1 billion into multi-tens of billions of dollars. And this is remarkable. And this is based on Bitcoin. And Strategy has outperformed Bitcoin in many different time periods. Pick your time, but at least pick different times and compare them together. And then I think something that is clear and that Bitcoin treasury companies keep repeating is that nothing replaces Bitcoin. And that if you don't want to trust anybody, then you should buy Bitcoin and don't look at the securities market. But what I struggle with a little bit, to be honest, is that Parker and other people that I've seen comment negatively on Bitcoin treasury companies also work for companies in Bitcoin with equity. So is the equity bad in general? Or is private equity good and public equity bad? Because personally, I've not seen the main difference. And I think we should all be celebrating people that work every day for the adoption of Bitcoin and be in private markets or in public markets.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Then if the point is to say, please remind that Bitcoin is the best money we have ever had, and I think Michael Saylor has always said that, in fact, and we have always said that, and I think on the other side, not understanding what capital means for 99.9% of the population, and even in the Bitcoin world, I consider Bitcoin as digital capital as much as I consider Bitcoin as the best form of money. And I do consider that Bitcoin is money and everything else is credit. And I also consider that Bitcoin is digital capital. And Bitcoin is money specifically because it is digital capital. And digital capital is achieved by absolute scarcity combined with global demand and digital accessibility. That is digital capital. And money has three components: store of value, and store of value is digital capital, is the capital component of money. And then you have the medium of exchange, and that's the payment side, the exchangeability side, the peer-to-peer transferability side. That is essential, but it is not the primary element for the adoption of money. It is the store of value component, because if you have an Argentinian peso, then it is not considered as a safe store of value even on the short term, and it cannot be globally accepted money. So for a global money to exist and win, it needs to be the best form of capital as well, to be adopted at scale. But there is something that, and then it's the unit of account, of course, the third factor, which is kind of a result of the first two elements as well in terms of adoption and so on. And so I think we can keep debating about those definitions, but it turns out that this, in my view, does not justify daily attacks or negative comments on the work of Bitcoiners working in Bitcoin capital markets. At the same time, everybody is free to have the different arguments. And here I see that image that on another time on the differences between Bitcoin and capital. I mean, I don't know what's the meaning there, to be honest, because frankly, everybody in traditional markets understand what is capital as a long-term store of value. And if you don't consider that Bitcoin can be considered as capital, then it will be quite a struggle to communicate, because a long-term store of value, and it can be considered as capital. And if Bitcoin is not digital capital, then we cannot really have a productive discussion. But if we have to use the term money to communicate, then that works as well. The point is, Bitcoin is at the same time the best monetary network and the best digital capital network. And the point is that you have companies that have decided to build corporations on top of Bitcoin, and that you can objectively observe value creation by the issuance of long-term to perpetual credit instruments that can increase the number of Bitcoin per share. The risk is that there is an underperformance of Bitcoin if Bitcoin goes down significantly and over long periods of time, because then the arbitrage between the financing rate and the growth rate of Bitcoin will not work that well, of course. And then there is a likelihood of outperformance of Bitcoin if the Bitcoin network grows on the trend that it's been for such a long time. And then there is the whole debate on the MNAVs and so on. But the whole point of the discussion is that the company has to put the most adopted MNAV metric in the industry on its website, but then investors will do their own analysis on the best MNAVs and whether to discount debt or senior claims, or how to place the cash, or how to just take into account the fully diluted base compared to the Bitcoin, and so on. Every company, every investor will have the best adapted MNAV analysis levels. But saying that in and of itself, from a general perspective, Bitcoin treasury companies could not have the potential to outperform Bitcoin is like saying that any company could not outperform Bitcoin. It's really difficult to say, because human possibilities can, in fact, create a lot of value. And the fact of the matter is that the companies that have the most potential to structurally, in a risk mitigated way, outperform Bitcoin systematically over the long run, if it is well structured, are the Bitcoin treasury companies, because they are purely based on Bitcoin. Their objective is to accumulate the most Bitcoin possible with the lowest risk possible at the longer maturities possible. And that is the rational thing to do if you are a Bitcoin maximalist operating in traditional capital markets. And I think that a discussion orally in a panel at some point that we could organize would be very helpful, probably, to get to some type of discussion. And something I would like to highlight as well is that I have good news, Tyler. In fact, Strike is in the same business industry as Strategy, because both companies operate in the Bitcoin credit markets. Strike offers Bitcoin collateralized loans, and Strategy uses Bitcoin as collateral to take loans, and or to basically take obligations, or promise to pay dividends. And when you see those two things, you see that there is a credit component between those two different activities. It's just not the same side of the trade. But if I had to choose, I would see that the opportunity that Strategy has to take fiat financing and buy Bitcoin forever is quite an attractive one, to say the least. And so that's, in fact, the same type of trade-off that the clients of Bitcoin collateralized loans are taking. And so if you criticize the company doing that and the clients of the Bitcoin collateralized loans can effectively do the same strategy, why would there be a contradiction? No, it's the same type of industry. In fact, everybody is working for Bitcoin to be incorporated as the best, most pristine collateral asset on Earth. And in fact, what I see is collaboration or co-opetition, you call it whatever you want. But even Parker on its side has contributed a lot to making strategy and Strive and Bitcoin treasury companies more well known to a wider audience as well. And I think all of this is also due to some misconceptions of how the capital market work as an overall industry. And Parker has another comment that is a critic of the name credit for equity, preferred equity, perpetual preferred equity. And the fact of the matter is that even traditional finance agencies call those products as a form of hybrid credit. The point is you are trusting strategy, you are trusting Strive for their credit worthiness as a perpetual equity, perpetual preferred equity issuer. And that can indeed be named from a practical, from an economic standpoint, named as credit. And it is in fact named as hybrid credit by the financial industry. And so if the financial industry has come to an agreement that this is in fact a form of a credit instrument, you might have some curiosity as to why. And the point is you are giving credit to strategy. You are giving credit to Strive for their ability, future ability. You are rating that capacity for their capacity to pay those dividends in the future. And then you can say, oh, but there are risks that you cannot see in traditional debt market. The point is, it's for the investor to do its credit risk analysis. And that comes into that analysis, and each investor can make that analysis. And when you look at Strive, they exactly say that this is not a monetary fund. And in fact, it's designed to be better in the long run, as it is based on Bitcoin. It's based on an appreciating asset, which means that over time, if you believe in Bitcoin, then if you don't believe in Bitcoin, we can have another discussion. You know, not speaking to you, Tyler, but who knows? You know, but if you believe in Bitcoin, the company has already on its balance sheet 30, 40 years of annual dividend payments. And this is, you know, in economy, I used to be economist for the CAC 40, half of the largest companies in France. And I used to work with 30 plus financial institutions in the adoption of digital asset infrastructure, Bitcoin custody, Bitcoin tokenization of assets, and so on. And when you work with the banks, when you work with the largest treasuries on earth, when it comes to fiat, you learn that one thing that is important is the comparability. In economy, you have to compare things in order to assess risk, in order to assess opportunity. And when you look at the credit risk profile of strategy, when you look at the credit risk profile of Strive, it is order of magnitude better than the traditional world, which only promises future cash flows for credit worthiness, while strategy, Strive, and Bitcoin credit issuers in the world have already the equivalent of 30 to 40 years of cash flows on their balance sheet in the form of Bitcoin. If you don't believe in Bitcoin, this is the most risky product you can look at, and you shouldn't touch it. If you believe in Bitcoin, this is the more robust balance sheet that you will find in traditional capital markets, and each different investor can make its own analysis. And then, yes, of course, for a Bitcoiner, Bitcoin is better than a digital credit product because a Bitcoiner wants the long-term capital appreciation, because it is digital capital and there is no second best. But if you are part of the 99% of the population that doesn't want to withstand those different volatility moments of Bitcoin, the minus 50%, minus 70%, then you might have some interest into digital credit. And yes, it is still composed of risk components that you need to analyze. Yes, it is still volatile, and we've seen that recently, minus 10%, minus 15%. This can come. The point is, Bitcoin has done minus 50%, and STRC and SATA have oscillating between 80, 85, and 100. So yes, there is volatility, but there is a daily now for Strive and bi-monthly for strategy payment of dividend. And this is attractive for a whole universe of investors. And again, if you want to criticize that new technology, that new infrastructure in the financial market, you can do it. The point is, this is inevitable adoption, because when you compare that with the traditional products available in the market, the Bitcoin-backed products, because they are backed by Bitcoin, because they are issued by Bitcoin maximalists in capital markets, will be structured in a way that is much more robust if you believe in the long-term potential of Bitcoin. And a lot of those different comments make me think that, in fact, people are not bullish enough. They think that Bitcoin is unlikely to grow at the rate of the financing of strategy and Strive. And perhaps Bitcoin treasury companies are being criticized for being too bullish when the market is bearish, you know? And the point is, if you want to build substantial capital, well, first of all, you need to see Bitcoin as capital. And second, you need to take actions that will enable you as an individual, as a corporation, to capitalize as much as possible on Bitcoin using the fiat monetary devaluation inevitability plus the institutional adoption inevitability of Bitcoin. And the best way to do that is through a Bitcoin treasury company.
Totally. Well said, Alexandre. And I think the crux of the whole argument is just like a misunderstanding of terms or not liking certain terms. But Michael Saylor's speaking to a completely different audience than Parker Lewis is. Parker said calling Bitcoin digital capital is designed to confuse you to buy stocks and not Bitcoin. But that's exactly, like you said, what a preferred equity that pays a dividend like this is. If the Bitcoin on strategy and Michael Saylor's balance sheet isn't long-term capital, how can you not call it long-term capital? Because like you said,
I had not seen that exact sentence. This is the contrary of what Michael Saylor says. This is the contrary. Michael says that Bitcoin is digital capital. So if you name Bitcoin as digital capital, you are not inviting anybody to buy stocks. Not at all. You are helping 99% of the population, and I would even argue close to 100% of the population, to understand what is the best money. The best way to understand that Bitcoin is money is to understand that Bitcoin is digital capital. Because if you have not understand that Bitcoin is digital capital, meaning the best store of value for the digital era, you will not understand that this is the best money, because the best money is first the best store of value, And by understanding that Bitcoin is capital, that Bitcoin is the best long-term store of value, the best long-term capital, you understand that since the first and most important property of Bitcoin is the store of value, then you understand that since Bitcoin is capital, Bitcoin is digital capital, Bitcoin is the best digital capital, is the only real digital capital, then you understand that Bitcoin is the best money under the Austrian understanding of money. And
That's right.
I think
That's right.
that's the main point. And probably that's maybe just a misunderstanding there. And I hope that the discussion we've had can diffuse.
Yeah, definitely. Hopefully we can hash it out with some of those guys too, on the show. Yeah, you were talking earlier too about like the performance over snapshots in time of strategy versus, Bitcoin. And this chart is just a 5-year snapshot, but it just makes it very clear. It's like, okay, in Bitcoin bull markets, you see what happens. The blue line here on top is, strategy's price. The yellow line on the bottom is Bitcoin's price. And we know Bitcoin was, ripping these past couple of years, and you can just see the amplified performance that strategy stock took, and then the drawdown, at the end of last year was massive, certainly for the equity, and that's kind of the structure. That's how it works when you're taking amplified Bitcoin returns, when you're putting it in this type of wrapper, right?
Yeah,
So
Tyler, I
yeah,
think let's look at a specific chart that we made. So here we have mapped out the performance of strategy, MetaPlanet, Strive, and Capital B since the respective launches of the Bitcoin treasury company strategies of those respective companies. And each of them has significantly outperformed Bitcoin by order or by orders of magnitude. So if you look at strategy, the plus 3,700% is the maximum performance that was reached. And maybe you can find the different, based on the specific time, you can find slightly different results, but that's about that, between 3,000 to 4,000% performance. Bitcoin over the same period was 1,000%. So that's a 3x more, at least there. And then you have the plus 900%. That is compared with Bitcoin plus 435%. And then when you look at MetaPlanet, Bitcoin over the period of MetaPlanet's adoption of Bitcoin is minus 11%, while MetaPlanet is up plus 1,000%. And when you look at the historical, it's plus 9,000%. So even if you would say, oh, look, in that specific period, the equity underperformed Bitcoin, yeah, but the equity has had periods where it was $1 million equivalent Bitcoin for the holder of the share, So, and the point is, if it went down, it's because holders of shares sold and made in sometimes profits, So, and sometimes no. But the point is, digital equity, Bitcoin-backed equity, provides opportunities in the market that investors can capitalize on. At the same time that they provide, of course, that they have also, of course, some risk in certain periods of drawdowns, that you can have amplified drawdowns in certain periods as well. When you look at Strive, plus 25% when compared to minus 30%. Where does the outperformance come from? Well, it comes from the accretion of Bitcoin per share of the companies because they have the ability to issue credit. And the ability to issue credit is a special capacity. It's a valuable capacity. It is because it's a publicly listed company. It's because it's an experienced team that has been able to raise institutional grade capital. It's because they have a product that has demand in the market. And the credit is where the value accretion is made for a Bitcoin treasury company. And Capital B, since the launch of the strategy, Bitcoin is down minus 8% since we adopted Bitcoin. We are up 200%. The share was literally at 10 cents when we started. The share is now at 40 cents. And so, yes, someone can take graph and say, oh, the share from the top to now, this is minus 90%. And you know, Tyler, the difference between the top and the level we are now, you know to what this is due? This is due to speculation. And this is not a bad word. Speculation, as Yves Scheffati likes to say from Toban, comes from the Latin speculare. And when the market is going in an upward trend in the short term, there is an amplification of speculation to the upside, and investors expect more growth and bet on the upside. And then the same happens towards the downside. And what happened was the compression for those different companies of the premium that was formed, and there was a 10x valuation compared with the Bitcoin because it was not overvaluing the Bitcoin. It was the anticipation by the market of the future potential accretion in Bitcoin per share because of digital credit issuance that was followed by a Bitcoin bear market. And when Bitcoin goes down, yes, it can slow things down in terms of capital market activity. And by the way, that there is another comment that I saw from Parker that there is some kind of criticism that Bitcoin treasury companies may acquire Bitcoin at levels that are higher and that they would acquire more Bitcoin when prices are high and slightly less Bitcoin where prices are low. And well, first of all, it's a very strange comment from a Bitcoiner because it's always good to buy Bitcoin, whatever the price. So let me make that comment. Nobody will care of the price at which you purchase Bitcoin 5 years or 10 years from now. When it is at $200, $500, $1 million, who cares if you bought Bitcoin at 30K, 40K, 50K, 100K? What matters for a Bitcoiner is the number of Bitcoin on the balance sheet. And the point is, Bitcoin capital markets were extremely liquid and opened at the time of the Bitcoin bull market. And if that's a time that you can accumulate a lot of Bitcoin, you should do it. And the second point I want to make is you don't have only to analyze the cost basis of the Bitcoin. You have to analyze what was the accretion in Bitcoin per share of each single purchase of Bitcoin. And it comes out that when the Bitcoin treasury companies have accumulated Bitcoin in the bull market, those were the most value accretive transactions in terms of Bitcoin per share. And so, in fact, you have to look at it from a Bitcoin lens and not from a fiat lens. The fiat lens of looking at it is, oh, this is a high cost basis. That is the first time I see a Bitcoiner saying that you would have a too high cost basis. Fiat is going towards zero as it is programmed to, because this is literally the mandate of the central banks, is to have a stable inflation. So by definition, there is a programmed dilution in the fiat network. And so you want to buy Bitcoin without looking at the price. And traders can make those different moves in the market. But the point of a Bitcoin treasury company is to apply the Bitcoin maximalism principles in capital markets at an institutional grade level. And the point is, when you can raise capital to accrue Bitcoin per share and accumulate more Bitcoin, it makes sense for the company and its shareholders. And so being, as Yves Scheffati says, it is an opportunity for certain investors that believe in Bitcoin and believe in the accretion of the digital credit model. It is an opportunity for a shareholder to access that type of amplified Bitcoin exposure. Yes, there is some type of leverage component it is perpetual. There is no maturity date, but you have some type of fiat payment obligations or promise in the market. And at the same time, this is the best way to, over time, outperform Bitcoin by fully betting on Bitcoin and by contributing economically to the strength of the Bitcoin network and by contributing to the decentralization of Bitcoin, because it's better from a first principle perspective to have 200 publicly listed companies with Bitcoin than 40. Who could say otherwise? It is better to have 200 companies holding Bitcoin than 40. It's crazy that I have to say that, frankly, Tyler. And then, you know, I have a typical comment, which is, oh, but most Bitcoin treasury companies are dead. Or most Bitcoin treasury companies are too small to succeed. And suddenly, the commentators that say that forget that those companies hold Bitcoin. If you hold Bitcoin, you will win. And you will win again. You have to do comparisons. And if you compare to the fiat traditional systems, the company holding Bitcoin will win. And if you compare with Bitcoin itself, the probability of a company winning in Bitcoin terms will highly depend on its capacity to issue the best credit instruments in its region. And that is why strategy is focused on being the largest and best digital credit issuer, Bitcoin-backed credit issuer in the world. This is why Strive is focused on digital credit in the US. That is why Capital B is focused on consolidating its leadership position as the largest and most efficient digital credit issuer in Europe. First, we have done it in a non-listed fashion with the Bitcoin-denominated convertible notes. And our ambition, our potential is to go towards, even if there is no certainty, of course, to go towards the potential of the digital credit products as we know it today. So I think the opportunity is a major one. I think we are on the same team, Bitcoin, and that at the end of the day, it all comes down to the success and the product market fit and the adoption of the greatest products, and let the greatest products win.
I love it. Great stuff. You know, I'm looking at the chart of Stretch today, and it's obviously being tested. You know, it's coming up on. It's been about a year in the market, and it's testing lows at 85. Which, you know, I mean, the yield on this thing now, if you're a Stretch buyer, that's like over 13% effective yield if you're buying that. So like certainly a great opportunity for people looking for fixed income. And there's huge volume just looking at the 5-day chart that's been happening. So there's people selling it, but there's so much volume coming in. I was looking at some of the like options markets. There's just like tens of millions of dollars being traded around, you know. But what do you make of, I guess, is this why is Stretch specifically getting tested right now? Is it just, you know, Bitcoin's price? Is it some of the narratives that have, you know, popped up, the bear narratives around MSTR? Because like it was 2 months ago that Stretch in 2 days raised, I think it was $1.5 billion, maybe $2 billion in a span of 48 hours. Just mind-boggling numbers. And you know, now again, like we know this product is backed by years and years, decades of dividend coverage from the capital on the balance sheet, the Bitcoin that's covering the dividends. So temporary dip, or what's your take on why this is happening? Are people, you know, piling into SATA maybe who were owning Stretch because of the daily dividends? And how do you think this plays out?
Sure. Well, first of all, is it possible to zoom out on the chart? Maybe the 1 year would be helpful. Yeah. So as you can see, there has been multiple times in the history of Stretch where it went towards the 90 range. Today it's going slightly lower, and you can see that around the 85, 87. And so that's, of course, a reminder that there is, of course, risk in every type of financial instrument. There is, of course, risk in any security issued by a company. And at the same time, it's backed by Bitcoin, and the company has 30 plus years of dividend coverage capacity. And so you can attribute that to a variety of factors. But the point is, every time that Stretch has traded towards the 90 range, it has traded back towards the par. And I've seen different commentary online in terms of the potential reasons. One reason is the market simply has some type of liquidations of investors that would have looped their exposure to STRC. And when they unwind all of those positions, is too much selling at the same time that the market can absorb directly. A second one is that, yes, there is some type of co-opetition or competition between STRC and SATA, at least their rates. And when you have the rate of SATA at 13%, the effective rate of STRC around 89 is about 87, 89 is about 13%. And so you have those dynamics, you can analyze them. The point is, we are in the middle of a Bitcoin bear market, and the fear, uncertainty, and doubt for in the Bitcoin ecosystem is at all-time highs, at least comparable to the past bottoms in Bitcoin. And STRC is, of course, backed by Bitcoin. And so there is some level of impact, of course, to the digital credit product when compared to Bitcoin. You can note, however, that Bitcoin is down 50% to 60%, while STRC is down 15% there. And so there is some type of volatility stripped away. Yes, of course, everybody would prefer that the instrument would stick at 100 and have close to zero volatility. And at the same time, you have to admire the growth, the scale, the rise of STRC in such a small period of time, about 10 to 12 months. And to raise $10 to $12 billion in 12 months is really remarkable. And yes, you can have period during the launch of a product, during the very early stages of a product. This is less than 1 year. And so you want to build that track record over time. And in fact, those types of events, when there are dips and when it goes back to par, over time, it's a potential. Every investor needs to do that own analysis. But if and when STRC goes to par, when you look back in history, this will provide the greatest confidence to the credit investors. And so, you have to let the time play its role. You have to be patient. You have to be engaged in education around the risks and opportunities of those products. And I think an important fact is that this is 10 to 15%, and the yield, the dividend is in fact 11.5. And so that's about 1 year of dividend, 1 year and a few months. And after that, then the liquidity is absorbed. And so, yes, the volatility is absorbed. And so, yes, of course, the target, the objective of digital credit issuers is that digital credit products could attain volatilities below double digits and in the very low single digits. And in fact, we've seen that for a couple of months. But in periods of stress in the market of Bitcoin, you can see those types of volatility events. And you know what will happen? Well, investors will price that risk when they invest. And you know what? They will be rewarded for that risk because of the discount that they get compared to the par. And you see a market formation of the fair price of young but very promising instruments. And over time, STRC is probably going to be, as it has been since the beginning, the greatest success of a credit product in the market. And the likelihood of STRC going back to par, is quite a function of the Bitcoin market as well. And as Bitcoin grows back towards the all-time high, the amplification level will be lowered in terms of comparing between the dividends to be paid and the balance sheet, and that will increase as well the credit profile of the company. But sometimes you don't have to look so far and so deep. Sometimes you just have hedge funds doing shorting, or you have market participants selling in certain proportions or being liquidated. And that can happen. And it's not because actors can be bad or good, or a product is bad or good. I think the point is the product has shown extreme success and growth over the last 11 months. And it is still a young product, but very largely adopted product with very high volumes. And yes, you can have, as you can see here, 10-15% volatility, but it's also a double-digit dividend rate that is
Sure.
paid by strategy. And over time, as Bitcoin grows, it's likely that, as it has happened in the past, that STRC will potentially go back to par. I say potentially because this is an analysis to be made by investors. But when you look at the past, you can see that STRC every time has traded back to par. And if you believe in Bitcoin, that likelihood is the most probable. And I've seen a lot of Bitcoin investors doing the bet and taking the position that STRC is likely to go back to par, as Bitcoin is likely to go back to the all-time highs and much more. And Strategy is the largest corporate holder of Bitcoin in public markets, and has the most adopted, most liquid, most institutional digital credit product in the market. It goes through some kind of a very small stress test with the 10-15% volatility event, but it is exactly those types of moments that will form the strength of the product when it goes back to par, and where institutions will see this is here to stay. And it will be the same as Bitcoin when it goes back to the all-time highs. Digital credit products are backed by the most pristine collateral, and they are therefore the most pristine credit instruments in the lens of a Bitcoiner.
That's great stuff. Yeah. At the end of the day, that's right. These are investment products. Bitcoin treasuries, like you said, investors do take a forward-looking approach to it. Of course, that's what speculation is. You've got Mag 7 companies, Google, Facebook trading 20 to 25, their PE ratios. Tesla's trading, at times 100, 200 times its price to earnings. SpaceX, we don't have, their earnings yet, but are probably trading, maybe even 500 to 1,000 times. But that is the nature of speculation. Like you said, with Bitcoin treasury companies, yes, when there's more speculation in the market, they will get bid up and trade at premiums. With Stretch, that's the nature of a product that's trading, 5 days a week, 9:30 to 4 p.m. in U.S. markets. And Bitcoin, of course, is trading 24/7. So investors, mark these things to market all the time based on sentiment. There's lots of factors that go in. If we were to mark our bank accounts, our bank accounts really are kind of a pseudo credit instrument as well. Like when you deposit money into a bank. You're lending that money to your bank. And, most people don't think of it that way, but that's what it is. If we were to mark those companies, to market, 24/7, we'd see some structural disconnects. But the way those products are formed, the longer they've seasoned, if you've got your money in a bank that's been around 100 years, you've got confidence, they're going to be able to invest that properly and return your cash. So same thing with Stretch. As this seasons, as they pay more dividends, as SETA pays these daily dividends, they're good. By the end of the year, they will have paid 200 dividends essentially, without missing a dividend payment, and the market will appropriately value those. And when it's all built on Bitcoin, like you said, Alexander, makes me bullish, gets me excited for the future of these products and adoption. And thanks so much for spending your time with us today. Yeah, leave us with your bullish words.
My bullish words are that there is an incompressible time for markets to digest new ideas, new products, new technologies. And MSTR itself, digital equity with strategy, had to go through a bull cycle and a bear market to then go back in the 2024 and 2025 big wave of adoption of digital equities. And now we have digital credit. We are in year one of digital credit. And you might need 3-4 years of adoption going through those stress tests. And remind yourself that those stress tests are fiat stress tests, because the balance sheets of Strategy and Strive are built for this. They are built to not have liquidation levels at certain prices. They are built for perpetuity. And if you are built for perpetuity and you have Bitcoin on your side, you will win. And so it's just a matter of time and of seriousness, of institutional grade structuration, which Strategy and Strive have provided a great example of. And this is a major opportunity for companies considering the opportunity of digital credit. And that is, of course, a major focus area for Capital B. And what we see is full interest from the market from those types of digital credit instruments. And yes, you have to go through those different cycles of adoption and stress tests and so on. But if you are backed by Bitcoin, you are benefiting from a massive wave of adoption and contributing to the massive wave of adoption. And so I'm glad to be with you on that journey, Tyler, and with Parker, and with Jack, and with Michael, and Matt, and Jeff, and Andrew, and everybody else, Simon, Dylan, everyone, and Guy, and Sam as well, of course, everybody. So
Yes.
I'm really glad to be building for Europe that Bitcoin-backed equity, Bitcoin-backed credit. And, if you would take from a first principle, is it better to have the adoption of Bitcoin in capital markets or not? I will leave you with that.
Yeah. Well said. Drop the mic right there. Thanks for tuning in with us, guys. If you're out there feeling bearish, hold on. This is Bitcoin, and we're seeing the asset. We're seeing it grow up and mature in real time. For Alexandre Laizet, I'm Tyler Rowe, and we'll see you next week on the Bitcoin Treasuries Roundtable.
Cheers.